Following a 10-year ice age amid the financial crisis and the COVID pandemic, Greece's economy is entering a long-term and sound recovery supported by spectacular reforms and strong fiscal impetus engineered by the Greek government, which is now borrowing from international markets with negative rates. The Greek economy showed higher than expected resilience to COVID-19 over the past 18 months, and the growth expectations revised upwards despite the uncertainty related to the Delta variant. The upward trend of several leading economic indicators paves the way for a robust economic recovery from the first half of this year onwards. In the second quarter of 2021, the gross domestic product increased by 16.2% yearly amid an increase in total final consumption by over 12%, investments by almost 13%, exports by 22.6%. Stimulus fiscal and monetary initiatives stabilized the economy and the financial sector, which proceeded to a record bad loans recognition of 46 billion euros within 18 months and 64 billion euros totally until mid-2022. The Greek financial sector cleaned up its balances and concluded ambitious digital organization and management change transformations. The formerly fragile domestic banking system is now a vital financial source of the Greek economy, and the initiation machine of 89 billion euros investment plans through RRF, NGEU, national investment programs and European structural funds until the end of 2027. The resilience of the Greek economy to the COVID crisis is also outlined by the drop of the unemployment rate and the sharp recovery of the retail trade, the tourism income, the building activity, and the resident property prices. The unemployment rate reduced to 15%, down by 0.7 percentage points over the pandemic year 2020 and lower than 27.6% 10 years ago. The robust growth rate is accompanied by a moderate inflation rate of 1.4%, an increase in retail trade by almost 11%, and a revival of the building activity close to 19%. Retail trade continued its upward trend for the second consecutive month after 5 months of negative yearly changes, reaching a 15.3% year-over-year increase last May. Real estate and the residential property prices increased by 12% from 2018 today, catching up almost half of the sharp drop during the financial crisis period between 2008 and 2017. The positive trend will continue for the next 3 years at least. In 2021, the tourism sector regained half of the income recorded in 2019. The stringency index and community immobility moved in parallel since the pandemic outbreak. However, from November 2020 onwards, the effect of lockdown measures on community mobility is weakening. Over the COVID crisis, the bank deposits of the private sector increased by more than 30 billion euros. Private sector deposits increased by 6.3 billion euros in the Greek banking system in the first half of 2021. The increase in savings during the pandemic, either precautionary or focused due to the containment measures and the release of pent-up demand, is expected to support the rise in private consumption expenditure this year. The solid fiscal impulse is expected to remain in place in 2021, underpinning households' disposable income. The latter continued to exceed private consumption, growing by 5.1% in Q1 2021, while households' gross savings rose by 6.1% on an annual basis. Greek lenders' analysis shows that the savings ratio continued its upward trend amid gains in households' gross disposable income, while retail trade is going on an upward trajectory with additional private sector deposits inflowing into the economy. Economic activity is projected to increase by 5.9% in 2021. The recovery is expected to gain momentum in the second half of 2021. Driven by pent-up domestic demand, the launch of projects at the RRF, and an expected increase in tourism receipts relative to 2020. In 2022 and 2023, the growth rate is projected to be 5.3% and close to 4% respectively. Investment is projected to pick up significantly over the entire projection horizon. Domestic economic activity is expected to pave the way towards an intense recovery phase that attracts new investment and closes the investment gap accumulated during the previous decade. 2022 and 2023 should see a faster increase in private consumption in line with an expected improvement in labor market conditions and a rise in disposable income. A crucial role should, in this regard, be played by EU resources, which will finance public and private investment geared towards the green and digital transition of the economy. Goods exports are projected to continue to grow on the back of the more robust foreign demand. Services exports are expected to trend upward this year, driven by a rebound in tourism receipts, while demand for shipping services should increase in line with global economic and trade developments. The rise in services exports is expected to continue through the projection horizon. On the other hand, imports should increase too, in line with domestic demand. Manufacturers' expectations are well above the threshold of the expansion phase. The Manufacturer Production Index and PMI remain on an upward trajectory from November 2020 onwards, signifying an improvement in operating conditions across the Greek manufacturing sector. Business confidence in all sectors of the economy is an expansionary phase in July 2021, with business expectations in construction recording their highest performance since April 2000. Albeit the heavy toll of the pandemic on economic activity, house prices remained resilient, growing by 4.3% in 2020, while in Q1 2021, house prices continued to rise by 3.2% year over year. Greek banks estimate that the domestic real estate market will be growing with an annual growth rate of 4 to 5% next 3 years. According to the 2021 European Commission Spring Economic Forecast, investment in construction is expected to increase sharply in 2021 and 2022.